All right, good morning. Welcome everybody. Depending where you are, it's either morning or afternoon. It's about 10 a.m. Pacific time right on the button over here. And we're going to go ahead and get this started. I see people coming on board right now. So thanks for joining us, and you're in the right spot. We're going to talk about 3 easy ways to improve your iron condor trading using algos. And you can trade like an expert in just minutes a day. We'll teach you all about iron condors as well as other types of credit spreads. And you're going to love what we consider our secret weapon. So this webinar is being recorded, so you will receive an email with a link to the recording that will expire Sunday night. So be sure to take a look at that if you need to review anything before Sunday night. So let's talk about speculation and risk. Of course, when we speculate, we assume risk, intending to profit on price movement, and that leads us to our risk disclosure. Take a moment and look at that. It's important to understand there's always risk in trading of any kind. Past performance is no guarantee of future results, and that only risk capital should be used. Here is our agenda for the moment. We're in a little bit about us, some advantages of futures options, hidden cost of securities trading, that means stock options in particular. We're going to look at some high probability option spreads and a live demonstration with our trade alerts, and also some FAQs as well as a special webinar offer. This is live and you can see me there hopefully. A little bit about Altivest. We've been doing this since 1997 as an introducing broker. All of our staff are licensed with at least 25 years of experience. We traded millions of contracts over the years, futures and options. We're regulated and we're located in California and Illinois. And with all that experience, we've traded, like I mentioned, millions of options in the 20 plus years. We've been part of this massive growth in S&P 500 options. So that's a lot of what we're going to talk about today. Great place to be: volume, liquidity, depth, ease of execution, all those things. We're going to talk about that. So we've learned along the way what works, what doesn't work. We put all that experience to use, and we like to think we haven't necessarily failed. We just found many thousands of ways that don't always work. So we set those aside and just kept what does work best. What do some of our clients say? Here's a client that's been with us since 2001. It's quite a while. And here's client Alex from Italy since 1999. They really are professionals. So very good. Thanks, Alex, with the Italian flag there. And who am I? Who's this guy here in the little window that you can see? I'm Eric Gebhardt. I've been doing this about 28 years. I'm a co-founder of Altivest, and of course I'm licensed since 1991. We're regulated with NFA and CFTC, and I have my BS in Business Administration from the University of Southern California. And oftentimes people might ask, where did you get involved with this? How did you get involved with this? And not really too much of a profound story, but I thought it was kind of interesting. I did find my investments course textbook from years ago, and I found it actually earlier this year, and there's the chapter on options trading. So we were studying options, and those are all my notes there. At the time, the crude oil market had doubled in value. You can see the graph. And we were studying crude oil options and futures with the invasion of Kuwait, making that market very, very volatile. So that piqued my interest at the time. I was involved then after that in the securities industry, doing mutual funds, but the futures and options space kept whispering in my ear. So I did get a job at a firm specializing in options and option strategies, and that's where I cut my teeth and learned the ropes, so to speak. So with that said and the introductions out of the way, we're going to go ahead and get started. Let's do our best to stay focused. We'll use our time wisely. I won't waste your time. Feel free to take notes, put those text messages away. Then we're going to jump into a live demo with a very unique, different approach to trading that probably you are not familiar with. So with that said, let me go ahead and increase the size of the screen. I'm going to go ahead and get rid of the webcam for now. Okay, so stick around for the live webinar offer. We'll show you something worth over $18,000 and how to get that for free. So with that said, here's something we call I bet you didn't know it. How about the advantages of the E-mini S&P 500 futures market? So that's the ES, that's the symbol. So this is something that some of you may or may not be familiar with, but we're going to talk briefly about it, and then you'll understand why we're so interested in it. It says here there's a study by the CME group. You can see the link there. In nearly every trading scenario, ES futures offer a more cost-efficient way to manage S&P 500 exposure compared to ETFs. So they offer more daily liquidity at 8 times the value of all S&P 500 ETFs combined. That includes the SPY and the IVV and the VOO. Now, what about individual stock options? Let's just shift gears a bit here. Well, it says here another study from the Wall Street Journal. Here's an article. Customers are pulling out of equity options trying to trade other products. They're shifting to futures contracts. 42% increase in futures volume in April, and that was from 2017. So the bid-ask spread has grown 30% in the past 5 years, peaking in 2014. So that's not good when the bid-ask spread gets wider. But meanwhile, let's look at something here with the ES options. Remember, we talked about the E-mini S&P 500 options, or futures. So let's look at the options on those futures contracts. There's a study there by the CME group. There's the link to that article about order execution quality. ES options can offer superior execution relative to SPX options, offer a cost savings of $4 to $15 per contract. Very interesting. So what they're talking about is the spread on every transaction, according to their studies, works out favorably more so than equity options. So very interesting. Now, when we talk about spread trades, I want to talk about we're looking here as an object. So on the CME group, which is where these E-mini options trade, everything trades when you're trading a spread as one object. So that means multiple options together are combined for one net price. That's called an object. Now in securities markets, spread trading doesn't have the same advantage of trading as an object. So keep that in mind. Now let's look at some of the hidden costs of securities trading. You know, in the news lately, everything is now free. Free stock trading, right? But remember, the cost of the transaction is very opaque, to say the least. There's something called payment for order flow, where stock brokerages are paid by market-making firms to route their orders for execution. That leaves our orders, the retail orders, ripe for exploitation. So what am I talking about? Well, maybe less favorable fill prices, costing more money, but the cost is buried in the transaction. So what are we talking about? Well, let's look at an article here. Robinhood making millions selling out their millennial customers to the high-frequency traders. Well on their way to making hundreds of millions of dollars in cash income by selling their customer orders to the HFT meat grinder. High-frequency traders are not charities. The only reason they would pay Robinhood tens to hundreds of millions of dollars is that they can exploit the retail customers. And that's an article from Seeking Alpha. You can see the link right there at the bottom. So something to consider, as we've all been told, there's no free lunch. So even though things are advertised as free, there are costs embedded in those transactions. So with the E-mini futures, there are no hidden costs. This is not a security option. These trade at the CME group. There is no payment for order flow, and it's one electronic market for everybody, large or small. All orders are routed within the same marketplace and all receive equal treatment. Some orders are not shifted or sold elsewhere for execution elsewhere. Now there's a variety of expirations in the ES space. With these options, there's weekly, Monday, Wednesday, monthly, quarterly, end of month, and then of course at least 3, maybe sometimes 4 expirations every month. Now, some of the advantages of the ES credit spreads using a stock index such as the mini S&P 500, something we like to call wiggle room. Of course, an index is less volatile than an individual stock. We all know that. So the market might make an upward or downward move, put pressure on one side of your spread or the other, but it may not adversely impact the value of your spread, and we'll see why in just a bit. So you're already familiar with iron condor spreads, probably, and if not, that's okay. Very simple. It's a non-directional strategy. You just collect premium. So you're selling options above and below the current index price, collecting premium. These are covered option spreads, a bull put spread and a bear call spread. And we like to do this on the ES. It's non-directional, and you want the index to stay between the short call. The short call is here, represented by the red line, and the short put down here, represented by the red line. Of course, the blue line are the options you buy to cover that spread. So with that said, let's look at the three, what we like to say, the three easy ways to improve your iron condor trading, or really your credit spread trading. So firstly, let's look at something called a dragonfly. It's a variation on an iron condor. It's another non-directional strategy for premium collection. And here is what it looks like. So you can see here, we're selling 4 out of the money calls, represented by the red line, and we're buying 3 further out of the money calls and buying 1 closer to the money call. And then with the puts, we're doing the same thing, selling 4, buying 1 closer to the money and 3 further out of the money. So this is also a covered spread, and we'll get into the advantages. We'll look at the demo of how this really works and what's the distinction between this and the condor in terms of the characteristics and the risk and the reward. But basically, you can see here, you are long a closer to the money call option, and that option, of course, will essentially gain value quicker and lose value less quickly. And same thing with the put. You're long this closer to the money put. So that's your key distinction there, and we'll get into that. And then there's also the half dragonfly. It's really just taking half of the one dragonfly. So you can do half dragonfly calls, like in this example, or you could do half dragonfly puts. So once again, selling 4 of these 2880 calls, and then buying 1 2860, and then buying 3 2920 calls further out of the money. So that's what we call a half dragonfly, whether it's a call or a put. There's something called a bear hedge, more of a directional strategy. Could be for a credit or a debit. But really what you're doing here is you are, in this case, a bear hedge, you'd be selling an out of the money call spread, and at the same time using the premium you collect to finance the purchase of an out of the money put spread. So you can see here, the blue line means you're long that 2730 put, and the 2710 put below it is what you're short, and then the opposite up above here, you've sold the 3060 call and you're long the 3080 call. Now remember, let's talk about a little bit of, maybe some of you heard of the Greeks talking about options, something called delta. If you don't already know it, it's very simple. When you talk about options, it's the approximate probability of expiring in the money. So 0.25 means 25% chance of expiring in the money. But really, what we need to look at is it's a 75% chance of expiring worthless. So that delta is always moving moment by moment with prices and, of course, as time goes. It does not represent the probability of a winning trade. So what about theta? That's another Greek. Well, that's just sensitivity to time. And remember, an option always expires. Limited lifespan, it's a wasting or decaying asset. So when you talk about theta, it's expressed as a negative number equaling 1 day of time decay. So what exactly am I talking about? Let's say you have an option at 10 points, and the theta is negative 0.05. The next day, premium would be 9.95, and the next day after that, 9.90, and so on and so forth, just because of time decay, theta decay. So remember, it's part of what gives credit spreads this wiggle room we talk about, taking advantage of theta decay when you're selling options. You know for sure, of course, that it will expire at some point, and that is theta decay. And here's what it looks like on a graph. You can see here, as time goes by, the percent of the premium remaining within an option starts to rapidly approach 0. So really, as a credit spread trader, you're hoping to be a boring person. You don't want to be the life of the party. You're not trying to make quick moves, and it's not day trading. It's what they call low velocity trading. So you're wanting to sell out of the money spreads and then watch time pass. So that is the whole idea of how we like to look at things. And I'll show you that in the demo in terms of how much time we're actually selling. And then, of course, you'd want to be able to consistently manage risk and reward. And that's really the number two way to make things easy. You want to automate your risk and profit management. You want to keep your emotions on the sidelines as much as you can. But of course, that might be easier said than done. It can be confusing. You don't know which trades to make. Where do you start? Which options to choose? What do you sell? What do you buy? You know, what strikes, what expirations, how much is a premium, you know, in terms of being worthwhile or not, when's the good time to get out, you know, so on and so forth. So how do you manage all of this? It can be very complicated, leaving us all a little bit perplexed, like Maxwell Smart. So the good thing is we've done all the testing for you. We've been sort of the astronaut training test program here. So we've done all the hard work over all these years. We've got a new approach, fresh approach to trading what would otherwise be very complex option spreads. We can do this very simply, very easily, take a lot of that pain out of the equation. It's called Theta Trader, something we developed technology specifically for selling complex option spreads, capturing premium. These are pre-built credit spreads. So an algorithm we developed will actually generate the spreads for you. And these are called theta trades. Same types of strategies sophisticated traders, professionals use, and you just saw a couple of examples. And of course, strategies can be applicable in bull, bear, and flat markets. We love the non-directional strategies. And we've automated things to make it even easier with the risk thermal indicator, automated profit and risk controls. What do clients say about it? It's a superb trading platform. If you have minimal trading experience, you can enjoy the benefits of sophisticated trading. So if you like what we're about to show you, we're going to show you how to take action at the end. So you want to stick around for our special offer. And with that said, all right, what we're going to do here is we're going to go ahead and switch screens. So let's see here. Give me just a moment to switch over. And there we have it. We are now on the Theta Trader dashboard. So this is our Theta Trader platform, and I'm going to review all this here. But I think the best thing to do is just kind of dig in and get started. So you'll see right at the top, Theta Trades. We talked about that. And there are bullish strategies that are automatically populated by the algorithm, bearish and neutral, and these are trading on the Emini S&P 500 like we talked about. Also the NASDAQ Mini and the Russell 2000 Mini, but really most of the activity at the moment occurs on the Emini S&P 500. So what you want to do here is let's take a look at an iron condor for starters. So here we go. This is what the algorithm has generated. Trades anywhere from 17 to 70 days till expiration, all pre-populated and filled out for us. And we can click on any one of these and drill down. I like to look at the ones that have most time for the demo purposes. And this is just a demo account, so don't really pay any attention to all the numbers over here. So here we go. You can see here we clicked on it and it's drilled down even further. Now let's take a look at the charts. The first thing I like to do, you can see we're trading around, let's say 3,000. So we're selling the 32.10 call and 26.80 put, and then buying calls and puts 20 points above and below. So that's what this particular Condor strategy looks like. So you're hoping that basically the market just continues to chop around, going sideways. Maybe it can drift a little higher or drift a little lower, but you can see how much distance there is. These are 26.80 puts and 32.10 calls, and we're trading around 3,000. So you're talking, you know, quite a distance above and below, in particular below the market. So let's look at some of the key metrics here. You can see there's 70 days till expiration, settled at 2.5 points at $50 a point. So you're collecting $125. Your put risk is 1,000. And let me show you how this works. The cash required is essentially the put risk minus the premium you collect in the commission. So let me ask you a question here, rhetorical, but you're probably asking it to yourselves anyway. So if it cost, if that's not really a cost, but if you have to deposit $900 or allocate about $900 with the intention of making just over 100, that's what this means, your maximum profit potential. Why would you put up 900 to make 100? Well, the answer is the delta. Remember we talked about delta? So remember, the 2680 puts that we're selling have a delta of 9.97. And what that really means is that over a 90% probability, according to the delta, that these options will expire worthless. And the calls are at 6.65. So you have a 93% probability that these options will expire worthless. So that is what we call higher probability trading. We're selling these options that have a higher probability of expiring out of the money. So that's really the whole key to doing this, and that's why you would put up a certain amount of money to make what would seem to be a smaller amount of money, just because the probabilities in the long run would seem to favor us. And then you can see here it's pre-populated with the sell. Quantity is always defaulting to 1, but let's go ahead and just do something for, let's say, 9. 2.5 points at $50 a point. You could also change the pricing if you wanted, and you can change any of these strikes, by the way, if you want to modify the theta trade, but quite frankly, most people just take what the algorithm delivers. And there's something called TROC, your targeted rate return on cash. That's at this environment where the markets are, the atmosphere and the VIX and where everything's trading right now, that's sort of anywhere from 10 to 12 seems to be where we've been lately with a lot of these theta trades. So that's the number to keep in mind there. And then let's go ahead and place that and see what happens. And there it is, selling 9 of these at a price of 2.5. As a demo account, it just assumes you are filled. So I want to do this. There's something else here we have called a simulator. This is great stuff. So you can go backwards in time and you can test all these theta trades. So let's look at some condors. I've already kind of queued up a few with different scenarios. You can see them here. And let's look at some condors, and then we're going to look at something that we looked at already briefly, the Dragonfly. So here is a condor on the end of month May, mini S&P, and you'll see here in just a minute when I get this started, these controls, they'll move the chart forward or backward. See here, watching day by day as the market starts to populate this chart, and we're kind of back testing. Now you can see what's happening here. This is called the risk thermal indicator. This is our color coding indicator that tells us what to do with our trade. Green means do nothing, all systems go. Yellow means a little bit of caution is advisable, but still do nothing, stay in the trade. So let's go ahead and press play. So you can see here it's just kind of vacillating between yellow and green, meaning that's okay, do nothing. Theta Trader algo says keep in the trade. Want to get everything on the screen here so you can see it. There we go. And then it turns blue. What does blue mean? Blue means take profits. So with 28 days remaining, Theta Trader says take profits on this iron condor, and meaning you've already sold it and now you want to buy it back for less than what you sold it for and take your profits. And in this case, this column here, PC, means your percent of your premium captured. So you've had 100% possible that you could capture, and at this level you've captured about 76% by closing that trade out and getting on with it and taking that winner and moving along. So that's kind of a typical quiet iron condor trade. Now let's look at some others, because sometimes people might think, well, why am I going to get out? There's still 28 days left, and I can still capture the remaining value here if I just hang on. But of course, you don't know you can capture, you don't know what's going to happen. So let's take a look. Here's another condor. This is back August 16, 2017. So all green, all systems go. And there's a blue. So blue means get out, take your profits. You've captured over 70% in this case of the potential premium. Now I want to point out something. The RTI can be automatic. Let me repeat, automatic. You don't have to monitor anything. You can set it up in the account so that Theta Trader can automatically close your trade out when it reaches the blue profit target threshold. And of course, there's also a risk threshold, and that can be automated too. So that is a key element to Theta Trader, and I'll show you how to do that. But here, once again, why would you get out when maybe there's 30% left that you could capture? So maybe you sold this for 2 points, you close it out, and let's see, 30% of that left. You'd have what, 60.6 left to capture. So let's say here you kept going, turns yellow, it's getting closer to this upper boundary. This is just kind of a scenario here where we're suggesting that someone did not follow the profit directive and they hung on to the trade. So let's see what happens. Go, oh, look at that, and it turns red. And red means you've taken too much risk and now the trade is a loser. So what I wanted to point out here is by not following the risk thermal indicator, you took a winning trade, hung on to it, and turned it into a losing trade. So that is why we want to keep our emotions on the sidelines. So let's look at another trade. Here's from June 11. You could do these all day. It's kind of fun to go back in time. Now this is kind of crazy. So this one here, look at that one. It goes from green to yellow, which is fine, and it goes orange, which means elevated risk, and then it turns red. It says you should get out. So keep in mind, anytime you're trading anything, markets can make big moves up or down one way or another, and you just have to be prepared. And the best way to be prepared, we think, is to have this automated for you. So this is a pretty big move here. I think, well, here, 150 points. Market dropped 150 points, and then Theta Trader said, get out. So take your loss and move on to the next trade. Okay, now I want to point out the difference between the Condor and the Dragonfly. And before I do, I want to run this one more simulation here on this Condor. Let's take a look here. All is well. We're moving along just nicely here. Everything's green day by day, no trouble. Getting a little bit closer to the upper band, but still no trouble. In fact, let me do something here. You can see more of the screen this way. There we go. Okay, so with 2 days left, Theta Trader says take your profits and move on. Now let's take a look with that in mind. I want to show you what the Dragonfly is all about. So let's go back to the Theta Trader dashboard. So let's go ahead and look at a Dragonfly for today. As a reminder, I think this will be a good refresher because we just briefly went over it in the earlier slide. So here is a Dragonfly. Let's look at the chart. So once again, we're selling 4 of the 3210 calls, buying 1 closer to the money and 3 further out of the money. And then you're selling 4 of these 2680 puts, buying 1 that's closer to the money and buying 3 that's further out of the money. So for every option you've sold, you've also bought 1. So it's a covered strategy. And here's kind of the difference. So of course, we're selling more options, so we are collecting more premium. So in this case, 10.25 or $512.50. But look at the cash required, about $4,500, obviously, because we're selling more options, we're trading more options. Your profit potential is about $428, so about a 10-to-1 ratio. And you look at your TROC, targeted return on cash, a little bit lower. It's a little bit lower than the Condor, but not by much. And you can see here that the deltas of the puts and calls that we're selling in this case are the same as from when we just sold the Condor in our example. And it's pre-populated here. Once again, it's a sell because you're collecting premium by selling net option premium. So you do a quantity of one would take you about $4,571.50 exactly to do this one Dragonfly. So I will go ahead and just keep the pricing the same. And we'll go ahead and place that order, quantity of one, and there it is. Now you're thinking, okay, that's fine, but what's the difference between how a Dragonfly will actually function compared to the Condor? Well, here's the Dragonfly I've queued up, and it is the same trade as this one here. Remember, we got out of this trade with 2 days left, took out with a profit, got out on April 29. So let's look at what a Dragonfly would have done during that same time period. Let's go ahead and play that. So once again, everything's green, and just to back up, this is the same time period here in which we placed a Dragonfly. So now we're just saying to ourselves, well, what if we had placed, I'm sorry, the Condor. So what if we had placed a Dragonfly instead? So all is well, no trouble. Everything's green. And look at this, it turns blue with 34 days till expiration. So with over a month of time remaining in that trade, the Dragonfly turned profitable. And you compare that to the Condor, you can see here when we had over a month of time, 30, 33 days, 34, 35 days of time, it was doing great. The trade was green, and that's great. However, it had not triggered a blue profit-taking order yet. So the key here is that the Dragonfly will sometimes generate the ability to close out a position for a profit much sooner than a Condor. And the reason would be, of course, that you are long these closer to the money options on the call side and the put side, which means they are not, they're either gaining in value quicker, or they're simply not losing as much time value. And of course, that's good when you have an option that you are long or that you've bought. So that is the key distinction there. Let's look at another one here. Here's a Condor. I already gave you the answer, didn't I? I should have backed that one up, but it doesn't matter. Here's a Condor from 2016. Oh yeah, this is interesting. I want to make this a little bit smaller so we can see it better. Okay, so you can see it's moving up towards that upper boundary, kind of flirting with disaster as it goes closer and closer, turning orange and yellow. But still, Theta Trader says don't do anything. And this is why the automation is so important, to keep your emotions out. Otherwise, you'd be a nervous wreck. Because look at that, you're right on the razor's edge, getting closer and closer to that upper boundary. Okay, good news, it turns blue, meaning take a profit with 8 days remaining. Now let's go ahead and look at that same, let's look at the same thing here with the Dragonfly. So this is Dragonfly, and it's the same time period. So you can see once again, it's running up to that upper boundary, and you get kind of a similar back and forth here between low risk and then elevated risk, but still do nothing. It goes back to orange to yellow. Look at this. Now it turns blue with 22 days left. So you compare that to the 8 days. So this trade using a Dragonfly turns profitable much more quickly than the Condor in this case. And as you can see, why? Probably because this long call is really basically gaining in value, or certainly not losing as much time value day by day as these further out of the money calls that were sold. Now, I want to also point out something too. It is possible if for some reason you were in this trade and you stayed in it, you can see that there's a window here where, let's say we played it to the end, but let's say there's a window here where it's possible that the trade actually ends up making more than 100% of your original target. You can see here the PC is the percentage of collected premium at settlement. So you can see here in the last days of the trade, you're over 100% of the potential premium because once again, you are long these options. And if the market actually were to settle somewhere in this range and you were still in the trade, of course, that could even do better. But that's kind of just a side note, really. By and large, you're going to want to be out of any trade before expiration, whether it's for a win or a loss. And at least that's how we like to do it. All right, so that is a rundown on the Dragonfly and the Condor. And I want to point out a couple other key elements here, and then we'll move forward. So I hope you're enjoying the demonstration. And I'll show you something that's probably the best feature of all. So what you want to do here is go to your settings. And we talked about the automated risk controls. Here you go. You activate your risk manager by checking that button and your profit directive right here. Just that simple. And all you do is use the functionality here in the settings and you take care of it. Now I also want to point out there are tutorials, video tutorials for Theta Trader if you need any guidance along the way. And there's also education videos on futures options, particular option strategies if you need a refresher. And these are all videos, all within Theta Trader. And let me also point out we have daily proprietary research, something called TradeScope. We do this every day, technical analysis, looking primarily at the Emini S&P 500 chart. You can see here we're looking at averages, moving averages, and some technical indicators, and looking for some crossovers and giving short, medium, and long-term trend analysis. And then we have a technical review, as well as a market outlook, and then key dates looking ahead. And that's done every day in-house. And then we also have the daily trading summary. So just a recap of what occurred that trading day, whether it's in the US or Europe or Asia. And also there's some key support and resistance elements here. We give a little quote board and any trades that were filled, any Theta trades, and a calendar for economic activity. So we keep you informed with all of our proprietary research. And then there's also, I want to point out something here called Trade Builder. So if you want to start and build your own trade from scratch, you can. You can see here all the different expirations available, contracts, strategies, and you just follow the prompts and build yourself whatever trade you want. But like I said, most people just choose to follow the Theta trades. We think that's the best way to go. Now let's look at how do you track all this? So this is a big deal because if you were to try to track these types of trades via a brokerage statement, it's a nightmare. That's a big catalyst as to why we put Theta Trader together. So here is your open positions page where you can get more of a summary at a glance, and you can see here everything is green. This is just a demo account, of course, and you can see all the different trades here. So if you want to look at any particular trade, let's say you want to look at this one here, selling one Dragonfly. You just click on that. Then you scroll down and you see it there. So that's what that particular trade has been doing. Got placed back in late September. Market's moving along and that trade's probably getting close. You can see here the RTI for it. It did turn yellow once, but otherwise, yeah, it's getting real close. It's over 65% right now. So it's getting close, as we like to call it, ripe, ripe for a profit-taking order. So this is super convenient. You can see every spread packaged up as a what we call an object. You don't have different legs, you know, all over the place, kind of lost, and that is very, very convenient. So the open positions, and you can see your history, your closed positions here as well. And you can see here all the trades that have been closed out and the P&L for every trade. And let me show you this real quickly. So there's 20 trades, 19 that were short, or basically selling a Condor or selling a Dragonfly, and then 19 winners. Then we bought one, and that turned out to be a winner, buying a call spread. So that's just a demo account, and that's just been the activity since, looks like, some of these trades back to what, July it looks like. Yeah, back to July. There's one losing spread there. Yeah, see, out of the two on this page, one was a loser. But anyway, that gives you an idea of what to expect and how easy it is. And in fact, just looking at the dashboard, you can see your open positions at a glance right here. And that's basically what people need to know. And if they have it automated, they don't even need to monitor things. They can have Theta Trader close out their trades automatically for them when they reach a blue or a red. So with that said, I want to show you what I think is the best feature of all. Let me switch screens here. All right, we're in business. So hopefully you don't feel too overwhelmed like Lucy and Ethel trying to package those chocolates, because it gets even easier. I think this is our best feature. So this is really, I think, the third element, the third element here that makes trading with us so easy. Our trade alerts, these are 1-minute trades. And what do I mean by that? It's one-touch trading. So you receive an alert, and all you do is touch accept or reject, and we handle the rest, because these are live alerts. They're integrated with your AltaVest trading account. So you don't have to do anything and log in somewhere else to go to some other platform and try to transpose the order and make sure you get the right strike and the right month and the right pricing and the right quantity. It's already done for you in these alerts. And that is how we make it really so simple. People absolutely love these alerts. And then, of course, if your trade is filled, you saw how Theta Trader and the RTI will automatically then track and manage your position and close that trade out for a win or a loss, whichever comes first. So here's a short little clip. You see you receive the text alert. You receive the link. You just click that link, and here's what happens. So you can see here, here's a description of the trade. There's a graph of the trade. Here is the premium collected, how much cash is required. The quantity is already pre-populated for your account. Gives you the days till expiration, your TAR, or your targeted annualized return is what that means, but you can read all about that. And that's it. You just touch green and you can accept the order, and just that easy. Let's look at that again. And of course, if for some reason you didn't want to accept the order, you just touch red and you can reject it. Just that easy. Now, I'm not sure how it gets even any easier unless we could do some mind reading or something. So that is great stuff. Clients love it. For someone with a busy life who doesn't have time to sit in front of the computer, AltaVest is perfect. The best thing about AltaVest are the trade alerts. So remember, you don't want to be a screen watcher. We want to make it easy for you. So you don't want to sit behind screens. You'd rather be on vacation, doing stuff with your family, doing other activities. You have a life to live. We get it, and that's really why we put this all together the way we did. We've been doing this for years and years, and if it's too complicated and overwhelming, people just aren't going to. Well, first of all, they may not even do it, but second of all, if they do, they may not do so well just because they just get overwhelmed with too many variables. So hopefully this was time well spent. You discovered something new and valuable. So here we go, special offer with everything you need now that you've seen the solution. There are two choices for Theta Trader, the Elite and the Pro membership. We talked about something worth over $18,500 available for free. Let me show you what I'm talking about with the Elite membership. you get your Theta Trader platform. Everything we just saw in the demo, the Theta trades, you can do the Iron Condors, the Dragonflies, credit and debit spreads, you name it. Simple, effective, automated, algo-driven trade selection. These are pre-built spreads with our proprietary algorithm. We talked about trade tracking. Would you rather look at this to follow your trades, or would you rather look at that? So, I mean, that's just a copy paste of one of our brokerage statements, and what a pain. It's just impossible. Trust me, you can't do it. You cannot make heads or tails of these spreads, especially when you get multiple spreads and they start overlapping. So this is why we did this. Super easy trade tracking. Now, what about the risk thermal indicator? Does it get any easier than that? Automatically exit your trades when they hit the profit or risk target. What we like to call autopilot, trying to take the emotions out of trading as much as you can. And you saw the automated risk manager. There you go. In yellow there, you just check that box. Same thing with the profit directive. Just check that box and that's it. Theta Trader handles the rest for you. Someone's been doing Iron Condor trades for 6 years. Your indicator is the best tool for monitoring trades. Well, thank you. I think we can agree to that. And the trade simulator. Great stuff. You saw the back testing. That's a lot of fun. It's like a game. These charts are what we call animated. Use those controls to step forward, backwards in time, or just play the chart out. And Trade Builder, build any trade you want from scratch. So you have the Theta Trades, the RTI, the simulator, and the builder, all part of the Theta Trader platform. Software like this is very expensive. People charge a fortune. At least $35.88 per year is the value on the Theta Trader platform. But remember, with the Elite membership, you not only get the Theta Trader platform, but you have private coaching with a licensed trader. And what do I mean by that? You have someone assigned to you, Series 3 licensed, experienced trader. You can set up 1-hour sessions and you can review index selection, Theta trade selection, simulator, diversification of trades, setups, analysis, alerts, advanced strategies, you name it. You can set up all these different types of topics and your private coach will basically walk you through all of this and train you on what you need to know, on what's relevant and not all the fluff. So knowledge is priceless. Having this co-pilot, develop this relationship. You're not on your own. This is not just an online thing where you have some bot that chats and never really responds to your question. So you can discuss strategy, review your history. Having this co-pilot here, $7,500 value at least to have a coach with you. You think maybe that's too high? I don't think so. Look at this. Here's a popular online education firm. I just saw this not too long ago. I looked online. They have 10 online option lessons for $5,500, advanced options for $13,000, and then lifetime access for $25,000. So there are firms spending, people paying tens and tens of thousands of dollars to get educated on options, and we can do that for you all in one spot with your Elite membership. And remember, you get the trade alerts. These are integrated with your account. These are tailored to you and your account. The alerts are live, they're integrated. Just touch accept or reject, and then the RTI takes it from there. Trade alert services charge a fortune, monthly fees, quarterly fees, yearly fees, at least $4,400 in value there. And then remember, you saw how to do the alerts. You just check the box right there, and that's it. So what do clients say? I love the alerts. They keep me informed when I'm traveling. Staff's always there when I need more information. Absolutely. So with the Elite membership, you have the Theta Trader platform, your private training and coach, that wingman, your trade alerts, a value of over $15,500. Now, if Theta Trader could just be that one thing, save you all the grief, the time, allow you to cancel subscriptions, lower your stress, it would be worth it. You would agree. This guy says, you betcha. But as we're all familiar with but wait, there's more line from all these types of commercials. There is actually more. Remember the bonuses with TradeScope and the research. That's our proprietary research. People spend a fortune on research and newsletters. You don't need to. It's all included. Yearly value of almost $3,000. And of course, the online videos built right into Theta Trader. We don't charge you anything for that, of course. That's just part of the platform. So you have Theta Trader, the training, the alerts, The proprietary research, the tutorial is worth over $18,500. Even at half price, it's a great value. Even if it were only $9,200, I think you would agree. But we can do a lot better than that. Of course, it's a live webinar, so you will receive everything for only, if it's okay with you, we'll over deliver. One-time payment of $997. That's it. One-time payment. And there is the link, cf.altivest.com/TT Elite. There is the phone number. Now, we're not done yet because we can do even better. And why is that? Why are we going to do better? Well, let me tell you about that. Instead of $997, if you act before Sunday night, we'll take an additional 20% off, $797. Just to motivate you, I know we all tend to procrastinate, and I've done it too. You like something, I think, oh, I'm going to do this, and the phone rings or you get distracted and you don't get back to it. So we're going to encourage you with that 20%, $797 one time for the Elite membership. How about this? The helpful AltaVest advisor. The brilliant algo system never failed me, and neither did my helpful AltaVest advisor. Very good. So here's basically what the order form looks like. You just go to that link. One-time payment, $797. Now here's the thing. You have no excuse. 30-day money-back guarantee. If you get involved, become an Elite member, and if 30 days, 29 days, and 23 hours go by, you decide it's not for me, that's fine. If it's not for you, we understand, and you can move on, and that's okay. We'll refund your money. So there is your Elite membership guarantee. And remember, quantities actually are limited. It is a one-on-one style of service. You saw all the training people receive. So you do want to get on board and have your spot there for that Elite membership, that one-time payment, $797, 20% discount. We talked about a free membership. We can do that, $100,000 account and more. We'll definitely refund that membership fee. You can ask us for details. Now, there's also something called Theta Trader Pro. What I like to say is if you want to hit the ground running, you're thinking to yourself, I love everything about what you just showed me, except I don't need any training. I've been trading for 20 years and I've got this all figured out, but I want to use your Theta Trader and these alerts because it makes it so much easier. It'll make my life easier. Well, we get a lot of people saying that exact thing, and that's okay. So how about this? One-time payment for what we call our Theta Trader Pro, $497. Actually, just kidding, because what we do is we make that free. Sign up today, Theta Trader Pro, and we'll make that free, no cost. You see the link there, AltaVest, cf.altivest.com/ProTT. Now here's the difference here, Theta Trader Pro versus Elite. Everything is really the same except with Theta Trader Elite, you have those private training sessions and that coach, that wingman along your side. Trading account types, yes, we do trade IRA accounts, individual, joint, corporate, LLC, trust, all those different types of things. We're going to talk to in a few minutes here about some FAQs, so stick with us here. Here's one thing that some people don't know. We could have put this in the I bet you didn't know category. So futures options are tax efficient. What do I mean by that? So they are taxed at 60% long-term cap gains and 40% short-term cap gains rates, regardless of how long you're in the trade. But of course, we know our trades are short-term. And now, meanwhile, stocks or stock options, ETFs held for less than a year are taxed at the highest 37% short-term rate or the higher rate. So what does that look like mathematically? Someone trading individual stock options, $100,000 account generates 20% return. Let's say they're in the higher tax bracket. They're going to pay a $7,400 tax, rate of return to 12.6%. Let's say the same thing happens and they're trading ES options. They're only going to pay a $5,360 tax, rate of return of 14.64%. Tax savings of over $2,000 simply because they're trading the ES and not a stock option. Pretty cool stuff. Remember, losses can be used to write off gains or roll backwards. You want to consult your tax advisor. And here's another great thing about trading futures options. You don't have to itemize each trade. None of that wash sales and all that nonsense. You just get your one profit P&L figure at the end of the year. You plug that into your taxes, and that's it. That's all you do. What do clients say about us? Our sticky clients, they've had an AltInvest account for 10 years. Trade alerts included suggestions on a wide variety of types and combinations of trades. The staff has been invaluable in continuing my education in trading index options. Been with AltInvest 13 years. They have been a professional team, pleasurable and easy. I've been with AltInvest client for 15 years. I highly recommend AltInvest. So act now equals lots of value, either the elite or the pro, whichever suits you best. Tremendous value. You don't want to do anything. That's 100% risk and reward free. Anyone can do nothing. So how about this? AltInvest has exceeded my expectations with their pre-selected theta trades. Responding to an alert takes but a minute or two. A chart and parameters are provided. I do not need to spend time at my computer. Well, that is a great summary for Theta Trader and the trade alerts. Now, this is interesting. Here's Jeremy Grantham. He was one of the few that suggested and predicted the 2008 global financial crisis. He says real stock market returns in the next 20 years are going to be 2 or 3%. So who's to say if he's right or wrong, but I think it makes a lot of sense to consider having an alternative approach in your pocket and doing something like with Theta Trader that doesn't rely on a market moving, in one particular direction or another. So remember, you get a summary here, the Theta Trader platform with all the Theta trades and the RTI. The elite members have that private training. You have the trade alerts for one-touch trading, all of our proprietary research, the education, the tax advantages, all that good stuff wrapped into Theta Trader. So with FAQs, here we are. We get a lot of the same questions. So let's do this. I think we'll probably answer them for you. And if not, that's okay. You can also ask. Can I trade stock options with Theta Trader? Well, the answer is no. Remember, we talked about specializing in options on the E-mini stock index futures markets, such as the E-mini S&P 500. So you can see the yellow here, S&P 500, NASDAQ, and Russell 2000. Those are the E-minis. So we do that because of the high growth, volume, liquidity in the E-mini futures options markets. You can see the S&P 500 options growth here. You can see the E-mini was launched about 22 years ago. I remember when that happened. I went to a conference on that. It's pretty interesting at the time. Now, what about the benefits of the E-mini options that we talked about as a review? Remember the tighter spreads? You can just track 1 or 2 markets, not thousands. So how convenient is that? Then there's that clear cost structure we talked about. It is not opaque. There is no payment for order flow or any of that nonsense. So can I use Theta Trader and the alerts with my current brokerage? Well, no, we are the brokerage firm, and we develop Theta Trader as our proprietary service, and it's integrated with our brokerage services. Now, what is Theta Trader's performance? People will ask. Well, we as a brokerage firm, every client makes their own trading decisions. But as a reminder, and I don't know if I pointed this out, all the performance calculations within Theta Trader, such as the targeted return on cash, we talked about the T-Rock, those are net of trading costs. So keep that in mind. All the percentages, all the numbers in Theta Trader are net of trading cost. And speaking of cost, what are the futures options commission rates? Our rates are very competitive, 5 1/4 round turn all in. So remember, you might see other published rates like 2 1/4, but that's per side. Don't let it fool you. And then they add more fees on top, and the total ends up being higher than what we charge in some cases. Some cases, yeah, of course, there's going to be places that might charge less, but it's a totally different service. It's a one-on-one type of service with us. You'll develop a relationship with us like we talked about. Even if you have a Theta Trader Pro, there's always someone here you can chat with. And we just offer something uniquely different than what anyone else does. But nonetheless, very competitive. So how much money should I start trading with? Well, let's remember here, let's look at it. About $1,000 needed for one ES Condor or $5,000 for a Dragonfly. So if you want to have 10 or more separate spread trades on at any one time, they're diversified among different markets or expirations and strike prices, I would suggest a minimum of 25,000. So remember we talked about taking action. If you liked what you saw and we show you how to do it, Well, there you have it. Those are the 2 links there. There's our phone number. We welcome you to call us if you have any comments or questions. There's always hurdles when it comes to trading. I think the first one is too much noise. You don't have to worry about that. With Theta Trader, you don't have to listen to any pundits or anything like that. What about chasing performance? Nope, don't have to do that either. Theta Trader works essentially independently. The types of strategies we're using, we talked about non-directional strategies, so you don't have to worry about that. It's what they call, in some ways, an absolute return approach or a non-correlated approach. You don't have to rely on a benchmark, or you don't have to watch the particular index of any kind only go in one direction. And then emotions, right? You saw how it can be so easy to set things up on autopilot with your automated risk and profit directive with the risk thermal indicator. So there it is. That is the lifetime membership, one-time payment, $7.97. Get that discount for the elite membership. Or if you want to run with the Theta Trader Pro, that's okay too. You can see the link right there for either one of those. But we welcome your comments and questions and feedback. We always like to get feedback after webinars, so give us a ring. Otherwise, most people just like to go ahead and just submit the form, and you'll get started right away, and we'll get you the documentation you need to get started, and we'll take it one step at a time. So thanks for joining us. That's going to wrap it up for now, and we'll let you get back to your day, and we'll keep in touch. So have a good one. Thank you. Bye-bye.